Hey everyone, welcome back to the Professor Trades channel, and we are going to break down natural gas. Now, we had a beautiful sell entry up in that Fibonacci area, so we are going to break down this pair on this video, and where I believe it's going. We still have two existing gaps that we'll talk about, but I'm going to break it down for you on this video. And if you watch it until the end, I'm going to give you a sell stop area at the very bottom of these fib levels. Let's get into today's video. Okay, so for starters, you can see here that we had a gap that was created up here at 3.19. This was back on June 11th. Okay, and then the gap was created here at the open. We just continually to fall from here, so that we do have an open gap to the top side. And then if we look right over here, we still have an unmet, very small, but yet unmet open gap down at 2.5897. Now, if you've been trading natural gas for a while, you completely understand that sometimes these gaps will stay open for weeks or months, but just letting you know that on this relative chart, we have a few gaps that are still open. So as we go now into the analysis, again, let me show you the reason why myself and our trading community, we took this sell entry. I'm going to kind of get rid of these Fibonacci levels here for just a minute. We began to see this upswing right in here. So what I did was grab a Fibonacci level, and what we want to do is we want to go from this low to this high right here, okay? And so, oh, sorry, let me do that away. Let's go the opposite way. We want to go from this high to this low. Okay, so now what we were looking at an entry where we like to take entry right between that 61 to 88 area. And if you see my charts, we'll mark up this particular area right in here, because we know that if price closes above the 100, that can signal a possible trend change. So that's usually going to be our exit point. So very important that when you have these types of rules, you're sticking to your rules and you're understanding the Fibonacci levels. At the end of this video, you're going to see up here linked up a fib level that's specific to crude oil. But if you watch that video, it works for all pairs. It works for natural gas as well. So take a look at that video at the end of this video. So this was a fairly easy sell entry. This looked like this on a short position, looking for entry, having our exit above the 100. And the goal is that we come back always to the zero line, because if you come back to the zero line, you usually are coming from where that swing low started on the swing high. Okay, so this is still an active current position. So let me explain on this short video what these green and blue lines are down here. So what this is, because of this pending gap and because there is structure here, if you look right over here to the left, we can see previous support, previous resistance, and then we've got that same right in here. So what I'm looking for is, if we do get down to this level, okay, that we have an impulsive move between 2.76 and 2.71. Okay, because when we came down here, this is a very impulsive area where even though price is pulling up, price moves very quickly in this area. Price moves very quickly in this area. Price moves very quickly in this area. So at this point, we don't want anyone chasing a sell. We want to see what price does right here at this 0, 0 line Fibonacci level if we get to that level. So what you are going to be looking for is you're going to be looking for an entry on a smaller time frame. So let me show you what that should look like. So if you see a candle close, and that's going to be the key word, kind of close down here in this area, and I'm going to make this red so it's consistent with our sell candles, okay, you have two options. You could either wait for price to try to come back up and retest this area, okay, and then take it down to our first blue line, which is going to be our first take profit at the negative 27, okay, or you can take the impulsive break of this area. Now, by taking the impulsive break, understand that sometimes you see something hit and then wick back up. So it determines on your trading style, on your trading plan, right? The safer route is always waiting to see if you get a candle close. So what you would do is you would drop all the way down to the 15-minute candle, nothing lower than the 15, because we don't want to see any, false breakouts and things of that nature. And you'll be waiting to see if that happens down here at this level with a red candle at the at the 15-minute level. Okay, so we are currently looking at this Fibonacci level where price took off on the 15, and I'm going to make this white so you can see it. Okay, so we are sitting in this area that we typically on a larger time frame would look for a reversal. But again, because we are looking at the momentum of the higher time frame, and this is where that institutional money is happening. Okay, we don't want to get caught up in a small time frame trade, especially with natural gas. We want to stay with this current trend. So I would not chase it. I would see what happens at this level, whether we are going to get a reversal like we did here, and then we're looking for that bullish engulfing candle back up to the top side, or we're going to see that closure below 2.76 on a smaller time frame, then taking us down to the negative 27 blue line. And then again, same principles will apply. If they break the negative 27 fib, we're looking for that red candle to close below and taking us trading zone to zone. So natural gas works very well, respects levels, and since that's why we like to trade it in our community from level to level. Now, listen, if you feel like you're lost, if you feel like you're alone, if you feel like you need guidance, I'm going to welcome you to join our trading community. Join over 200 plus international traders that are going to be chatting all the time. We're sharing charts. I do 2 live analyses per day, one for US session and one for London prep. Come on in and check it out. You can see the first link down below in the video description, or I'm going to scroll it here at the very bottom. You can just head over to theprofessortrades.com. Take a look at that site. Multiple plans for you to try. Also join our free Saturday Trader newsletter as well. But you also will have that included in your membership. Come on in and see what we're doing, because trading is hard, but trading in a community is much easier. Okay, I hope you got some value. If you have any questions about this particular setup, drop them below in the comments. I'll get back to you within 24 hours. And if you got some value on this video, hit that like button for me. Thanks for watching and happy trading.